Now time to dig into some of the moves that we're seeing here right at the open. U.S. stocks are rebounding today, coming off the S&P's worst sell-off this year in Friday's trade. However, the benchmark index has gone 35 trading sessions without back-to-back losses of 1%. So will the dip buyers return today and keep that momentum going? We want to bring in Michael O'Rourke. He's JonesTrading Chief Market Strategist. Michael, it's great to have you back here on the program. It certainly looks like the dip buyers are back. What are you gleaning from the early action that we're seeing this morning?
Yeah, I do think they're back today, but it's still early. I think Friday definitely spooked a lot of people as far as the economic data we received. There were dip buyers, I think, in the market Friday. There was some nice ETF inflows in the S&P 500 spiders and the other S&P ETFs, S&P 500 ETFs. But the volatility we saw Friday is something we haven't seen in quite some time. So it'll be interesting to see how this week plays out, especially with Nvidia's earnings later in the week.
So do you think it's safe to buy this dip going into Nvidia's earnings?
It's not that much of a dip, so that would be my concern. We hit all-time highs last week. I think it was Wednesday. Yep. So I think there's still a risk here that there's going to be more volatility that has to play out. And what you're seeing here is some of the names that have led the recent rally, whether it's Palantir, obviously some of the Mag 7 names. Nvidia had a massive bounce coming off of its DeepSeek lows. That you've seen some narrow leadership push us to those all-record highs. So I think we're due for at least some consolidation here. And I think you're going to see investors, while they'll buy the sharp downward moves like we saw Friday, I think if we see more of a slow leak or consolidation, I think you'll see people take a step back.
Michael, do you think Wall Street's a little bit too quick to dismiss some of the concerns still surrounding tariffs? And I guess what kind of volatility that could further introduce here in the weeks ahead?
Well, I think, it's funny when you guys were talking about the Robinhood new accounts and the big boost in their business earlier in the segment, that just highlights the way everyone's felt about the election, right? Since November, everyone's really piled into the market. Everyone's been very bullish, very optimistic. And I think, we have a long way to go for all these optimistic Trump policies to come into shape. It's one of those things where, you do have to break some eggs to make an omelet. And I think we're going to be in the egg breaking stage for the next, 6 months to a year. So while we've had this early euphoria for the past 3 months or so, I think you're going to start to see that fade in the coming weeks and months as we try to see whether it's tariffs and other measures the administration's taking while the market has to really digest those to see real progress somewhere down the line.
Well, for the price of eggs right now, it better be one damn good omelet, Michael. Ultimately, as we're thinking about moving forward from here, any type of recalculation that we're expecting off of this earnings period for the full year growth estimates as well here, have you seen that start to play out as we typically get some of those revisions early on, companies starting to step back off of some of the more aggressive outlooks that they have?
Well, yeah, I mean, I think you could definitely characterize this earnings season that's basically ending right now as somewhat disappointing. We're still looking at a good growth environment overall, but as we know, it's very top heavy, very much driven by the Mag 7. Obviously, the biggest driver of earnings growth the past couple of years has been Nvidia. So their report's going to be that much more important. But you're also looking at a situation where the Mag 7 is twice as expensive as the other 493 names in the S&P 500 together. So a big trend we've seen since, I'm going to say since Christmas, but especially since the beginning of the year, has been investors being a little more defensive, rotating into those other 493 names or the S&P 500 x the Mag 7, while you see the Mag 7 names consolidate a little bit. So like I said, I think we see those earnings growth numbers start to moderate here, but it's still expected to be a positive earnings year for the market.
Michael, I guess put NVIDIA's results into a little bit better context for the viewer here. How significant are the results that are coming out later this week in comparison to prior quarters? Does it still hold that same weight?
I think it does. Obviously, NVIDIA has been the best. It has had one of the most remarkable ascents in the U.S. stock market because its business has grown fundamentally that well and that strong. from being a company that was doing, $15-20 billion in revenue, is going to do $120 billion in revenues in the matter of years, a couple of years. So that type of growth is really important going forward here. Now, of course, those growth rates are going to moderate, so that's important. But that type of change, that's why it grew to become the largest stock in the world, or largest market cap in the world. So it makes it very important. And of course, it's the cornerstone of the AI trade, right? Every major corporation is investing tens of billions, and especially hundreds of billions over the next couple of years into AI. And thus far, Nvidia has been the primary beneficiary of that through their GPU sales. So again, it really is the pulse of where the growth is in the tech economy, which in a lot of cases is the U.S. economy at this point, and especially where the stock market earnings are and earnings growth is going forward. So I think it's as important as ever, basically.
Michael, thanks so much for taking the time here just after the opening bell. Appreciate it.
Thank you.